Today is Thursday, September 10th, 2020. New York City opens their indoor dining at 25% capacity. This is big news. Nobody is going to survive in the restaurant industry at 25%. Never mind 50%, but 25% capacity for their entire restaurant every day. How are they? I mean, a low margin business as it already is. How are they going to survive? Stocks are still extremely overbought and, trading at extreme .com oriented euphoria territory. And this .com, I mean, in terms of a PE multiple metric, we're literally 0.5% away from that .com euphoric actual PE ratio. And all this is happening, all this euphoria is happening while 30 million people in just this country alone are on unemployment benefits. And of course we have cases of inflation. The price of lumber, as we've seen obviously recently, has risen dramatically, right, because of housing prices and people moving out west, people moving away from major cities and metropolitan areas. So recently copper also has actually been surging in price. And also recently, actually today, Century 21, right? So Century 21, the retailer, filed for Chapter 11 bankruptcy. They're going to shut down all their stores, all 13 of them. Okay, surprise, surprise. All the retails are going down. JCP, all of them, right? Because they're the most levered ones of them all. I mean, besides the banks and the Fed themselves, I mean, the retailers are the ones that are taking the biggest hits, because we already saw this introduction of online retail and how e-commerce also has been, virtually exponentially expanding and taking a lot of market share from physical, whether it's mom and pop shops or, physical retail shops, and all, even obviously systematically related to wholesales, and, obviously then systematically related to macro trade. And, we're the biggest importers in the world, and a lot of countries aren't able to service what they were pre-corona, because there's a lot of shortages out there. There's a lot of there's scarce dollars, there's scarce coins, but there's always been scarce coins, but scarce dollars nonetheless. Obviously we saw when oil hit, oil futures contracts, that one, I think, May contract hit negative $40 a barrel. So it's basically like paying somebody to sell your own oil, which is kind of amazing. Just like our short-term notes, 1 to 3 year short-term notes, on a real basis, not nominal, but real, are actually negative. And that goes for Japan, who've been doing basically monetary policy for just as long, if not longer than us. A lot of other countries are also doing QE, because they found out the magic power of the printing press. And the printing press is on all day, 24/7, and the button's never going to stop, right? The printing press is never going to stop printing, because that is what our economy relies on. A debt-based economy, it relies on more debt. So anyway, I actually wanted to share the only actual single trade I made today, which was, the ticker was YTEN, which was a primary mover in the small cap world today, I would say. Pretty slow day per usual. I'm going to go ahead and share my screen here, so you guys could follow along with me. This is actually not, what's it called? It's not YTEN, right? YTEN obviously went in with extremely small size. I used all the buying power I had, right? Because everything's in PRPO, which is down over 20% today. We're not going to get into that today. That'll be a separate video. But anyways, yeah, so even right now we're seeing how tight this is really coming in. Volume's shrinking up also, money's coming out, while stocks overall are actually, they're somewhat flat, but they're actually fairly up on the day overall. But don't fool yourself with the performance of overall indexes with mega cap tech stocks like Apple or Tesla, because they are literally the leaders and primary leaders in a market cap weighted index. of these indexes. So YTEN, actually, I drew this descending resistance, knowing that this is a symmetrical triangle formations technically, because I use, right, this is the 200, the 100, the 50, all those three long-term moving averages, then the 13, the 10, and the 9, 13, and the 20. Those short-term moving averages are kind of the equilibrium average between the long-term moving averages and the descending resistance drawn from pre-market highs of almost 10 to currently. And we've tried breaking out. We tried breaking out before. We bounced off there. That's where I actually got in, right? I bounced off the 50 SMA. I got in at 735. I was confident that it wasn't going to break through, because look how many times I already tried breaking through and just simply tested higher. So that's exactly what it did. And, I wasn't going to hold on and hope, right? I'm not going to hold on and hope that it will break out, because we saw it broke out and it failed. It was a fake out. Did it even again just after and again. So, and the reason why I didn't hold was primarily because look at this volume, this drying up of volume, and it seems even so pretty manipulated. This is what I would call a zombie market, because these zombies are, number one, arbitrary. They could be large in size if they're all together, and their momentum underlies their positions. So their positioning, like I said, could be very arbitrary based on where the price currently is of the market value. So it's very, very important that these zombies don't affect your trade. And how do you tell? Well, a stock that has 5.5 million shares in just one arbitrary candle, and then the next 5-minute candle is just under 1 million, that doesn't sound right. So simple stuff like that. So that was pretty much all I wanted to say today. Just a pretty quick update for you guys. Hopefully what we'll be able to do is show you guys, and kind of update you guys on the PRPO trade, and we will talk soon, right? So, click the like button, subscribe. There's going to be so much more. Okay, thank you very much.